All right, good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for October 16th, 2023. Start with the 30-minute charts, the hybrid swing portfolio, starting with Alcoa. 30-minute charts. So yesterday we took our fractional win on the short. It closed here. It gapped up and started taking off. I was slow to exit, took a minus zero point 0.3 here. It continued to fail when the RL10 rolled over, came through the dragon. I took the short with standard risk and covered here in the last little bit of the day for about a 0.6. And it was really just to get revenge on the previous trade and escape with my dignity. So no overnight risk on Alcoa. AI took the PSAR flip in the morning after 30 minutes, standard risk. It monkeyed around, went sideways, and I exited at a scratch. Amazon, this is one I'm holding overnight. So this is an SSC entry because we have the harsh winter that rolled into spring, began entering the Red River. We got the PSAR flip. I get my standard risk. It moved out nicely. I considered a second position here. If I had put the second position on when it goes into the summer and breaks out to a new intraday high, then I would have probably exited up in here. But because I'm only holding one, and I've got minimum 2R in hand, I'm holding that position with 2R in hand overnight. So that's an example of this pattern is a supported spring crossing. In a larger sense, if you looked at a higher time frame, you could probably find a COTA 2 in here. But really, because we had two legs down, and this was a lower low in the Dragon and the RL10, I'm treating that as a SSC. Next up, Caterpillar. This one, there was no trade yesterday. Today it gapped up to here and continued, so I bought it with a standard risk. It rolled over and immediately failed for a half an hour loss. So this is minus 0.5. It then reversed. I took exactly the same entry, exactly the same risk. It made about it was about a little over 1R in hand and started failing. I exited here in order to get to scratch on the day in this symbol. And Caterpillar's one that if it's working, it usually continues to grind, but it just feels like the overall negative trend was dominant, so I took the half R that was available. I considered getting short here. I didn't. I don't like flipping Caterpillar. I would rather be long them. And this is kind of early in the day to be, early in the pattern to be short. And then I watched it pay off. It recovered nicely here. Now, tomorrow, if we get a break above the skin of the dragon or the peak of the dragon, I could see this becoming a COTA 2 trade very easily. So that was one reason I'm not in a hurry to trade it today, because we could definitely see this working tomorrow with this as a swing low. Whoops. With this as a swing low, and that's your COTA 2 pattern. And then we'd want to get long right around in here, and then if it breaks above the RL10 is where we would think about a second position. Cliff Natural Resources, it was a gap up, a PSAR flip. It started showing early support, which was a common feature of the day, and then quick failure. This was the time of day where everything that started off tentatively well was failing, so it made it easy to just scratch. And then there was nothing compelling about this move the rest of the day. I do like the rising PSAR. I like the double bottom and then a RL10 higher low. So this sets up a COTA 2 for tomorrow at a price really above today's high. I could see that as a COTA 2 entry tomorrow. Would not be surprising. CVS, this was a gap up and go. Closed here, gapped up to here, sold off, and then resumed. So I bought it with the standard risk. It failed to here, and then it started really collapsing. So I got short here with that same standard risk. It sold off hard to the low of the day and then reversed. And I took that exit for 2R and no overnight risk. It then started to collapse again in the afternoon in the last hour. This little roll over here now sets up a collapsing dragon tomorrow below like 71.30. So that's about 71.30. So if we see a price collapse there, well, I think we want to get short in this space so that then if the dragon collapses here, the RL10 collapses, we can front run that a little bit. But you want to be short not later than about 70.80 anyway. So if you can get that extra 50-cent gain by getting shorter sooner, there's nothing wrong with that. And that difference between short at 71.30 and 70.80 is the size of your risk box. And that's the argument for being ready to front run tomorrow on weakness. Disney was a gap and go. So the long slide finished here yesterday. There was I say yesterday, I mean Friday, of course. Here's your PSAR flip, and an SSC entry was available last Friday. It was too late in the day to do anything. Today it opened up in here and took off. So this was a easy entry with a standard risk box. This did nothing but take off all day and finished here. 2R in hand plus some change. That feels good. What I like is that this closed higher than the previous RL10 and Dragon. So this is a nice recovery in Disney, and it's going to look attractive tomorrow on a larger time scale. So if we looked at the daily report or the daily chart, that's a really strong looking move today because you have the RL10 here, and it closed just above that. The last time it was here, it reversed, but then it held support at the edge of the dragon. So this is setting up almost a lazy man's COTA 2. So there's no resistance here until it gets up to the dragon at about 88. So that's the move potential tomorrow, another couple bucks. And if it breaks above 89, then you want to have two positions on by that point, and it'll be Disney will be back in the game. So that's a really strong daily chart, and on the 30-minute chart, you can see why that looks really good. And there's a lot of buying interest in this right now, treating that as deep value, and that's almost a lazy man's COTA 2 pattern with the higher lows. And the fact that it cleared this hump, off we go in Disney. A Godzilla pattern come into play. All right, back to Dish. So Dish, we cashed that one Friday. It opened here, continued to go, did the PSAR flip, got long, It failed. That's where everything was failing, so he scratched it. I thought hard about getting short there, didn't, and then watched it collapse. This was a collapsing dragon late in the day. This will still be there tomorrow, so have that on your short list in the event of market weakness tomorrow. Because if that collapses, there's no real resistance all the way back to the 30-day low. So that could be in free fall tomorrow. Devon Energy, standard work. This is a re-entry after Friday's 3R gain that closed well. There was a micro gap, and with rising oil prices and the world at war, this is another 3R in hand. My stop is at the PSAR. I'm looking to add to that if we get an upward move tomorrow. Electronic Arts, no trade. Emerging markets, very nice intraday trade. This is an SSC supported spring crossing. You know, there was the harsh winter. It crosses into spring, and here we go. Standard risk. Here's where it turns to summer, and I was happy to get paid 3R. It's halfway back up the stack, so that's a natural pause anyway, and that was resistance last time. And I know how to get back in. If it breaks above 38.20 tomorrow, I'm back in, no problem. I just don't want to take the overnight risk. And EEM is one of those international ETFs that gaps quite a bit. ETHE, this one, no trade today. Mexico. Now, I traded this one. Why is it that not drawn? I just lost my drawings on here somehow. Stand by. Well, I don't know why we lost the annotations on this. But this was the cleanest SSC you ever saw with an exit here. Fellas, I cannot understand. Where do I check drawing on at, Tucker? I mean, I do have the I have the clicker on, and it's showing the annotations on Alcoa. Let me pause the tape here. And here we go. So yeah, so in Ethereum, I knew I'd traded that one. This one had a great big gap up. It sold off intraday, and then I treated that as the Kata 2 that it is. And I'm holding that one overnight because that feels like a change in regime, and it's above the RL10 and the daily high. So I like that one. I'm holding 1R, and that's a speculative overnight play. Mexico, standard work, holding 2R, 3R after the SSC. Brazil, Kata 2 entry after Friday short, holding about 2R. It's cleared the previous resistance. Intel, no trade. I missed this one. I did get it intraday, but no swing on it. It was too choppy to think about swing trading it. IP, no trade. Real estate, I'm certain I traded that one. So no trade on IYR. It's a good intraday trade. We'll see. Coca-Cola took the Kata 2. Why is this a Kata 2? Because you have a swing low, a higher low, and then the PSAR flip. You could also call it an emerging dragon because it cleared the RL10. But we're holding about half an R. This is about a 0.5 win. But I like it that it has cleared this resistance, and I like it for tomorrow. This is a deep value play. And there was some buying pressure all the way up to 54.5. Regional banks. So this is one that Friday we were short to here. And here I made the decision to hold it over the weekend, looking for a collapse and bad news. Instead, we got the gap to here, which turned it from a 2R win to a fractional win. In the second half an hour bar, it continued to rise, so we bought it here. I like the way it closed, so I'm holding 1R, and I'm going to hold that one overnight in that direction. So we'll see if we can't get the gap to work for us tomorrow. Mattel, Kata 2, follow through, half an hour. McDonald's, no trade. Merck, Kata 2 for about half an hour. And again, this was typical of the day when a lot of things that started off promising then just kind of depleted. World at war. I was very much a bird in the hand versus two in the bush. Microsoft, another gap and go, a half an hour. Marijuana, no trade. Nvidia, no trade. Supported Spring Crossing in clean energy for a fraction. Rivian, this is an entry that I'm a speculative one that I'm holding. So here's our. This is a SSC, and but it closed well. There was no sign of a sell-off, and I'm taking the last upward move as positive momentum. So we'll see how that works tomorrow. I'll hold that one overnight. Treasuries got smashed, no trade. Tesla, this is a perfect example of an SSC, and being able to buy Tesla on sale around 253. Here's the turn. That's the one we cashed Friday for 3. There's your SSC and a turning point. Standard risk closed for about 0.5R, and that we'll see if that's going to be a turning point. That's my speculation. Then U.S. Steel. This was a collapsing dragon. This has not been trading as easily as it has in the past, but this one, this sell-off with lower highs and lower lows, that's really just a channel trade. And here's the collapsing dragon, 90 minutes into the session, and no buying pressure to be seen. And this is when the rest of the market was failing, so that was about the lowest risk entry I could get. It made a big collapse down to here and started rocketing its way back up, and I just decided to capture 1R. On this failure at the PSAR, I thought really hard here about getting short. It closed poorly. I did not. But if this collapses below 33 tomorrow, I'll get short again in U.S. Steel. So that's the hybrid swing portfolio. Pretty good day at work with a very little market follow through. So we took what was available with a lot of fractional wins and very few positions overnight. We'll go to some sniper trades of the day here. Stand by. All right, so there's our, we're now on the 3-minute charts. This is IYR. Here was Friday's close. Here was the gap up. Here's the OR3. And I'm ready to go long or short with a standard risk. That was, I think, the biggest gap in my stack. It broke below the OR3, so I'm short with the standard risk of the yellow box. It moves 3R in my favor right out the gate, and then reverses 1R. So I cash that one, and there's your 1R, 2R, and some change. So that's about 2R. Checker hold, standard work. All right, it continues. I treated this as a COTA 2. We had a low, a higher low. And after this recovery, there was actually a nice run up and a reversal and then another run up. So that felt like that's what gave it this COTA 2 flavor. So we're long at the PSAR flip with the standard risk box here. Span of control issue. I was adjusting a lot of the 30-minute swings during this period, so under other circumstances, I might have taken the second position here after this little consolidation. After a nice run up and this is testing the new high of the day, that's a reasonable second position. So is this after the little R10 wiggle, but it was span of control issues. It rolls over, I take the PSAR exit, and this one is yeah, so that's about 2.5R. There's our unit of risk. Here's 1R, 2R, plus some change. So this is 2. That's 2.5 so far net. This is an owl entry short. Why? Because we had a very good trade, but we have a RLXD. We have a P1, the R10 crossing the RL30. You have the RLXD. You have the dragon rolls over. You have the 30 rolls over. That makes this an owl entry, standard risk. And what I'm looking for is just a return back to this cluster here, which would give me about a 1, 2, 3, 3.5R. So the target is there. If that fails, I'm ready to re-enter, but we'll see. That one scratches. Now this is getting ready to set up a what kind of pattern, fellas? You have higher lows after a successful trade. What kind of pattern is this setting up with the declining PSAR? COTA 2. And that one scratches. I re-enter on the PSAR flip, another COTA 2 scratches. Try one more time, fraction, and that was it for the day. And this one pulls in about 4.5R for the day. This is not unusual for IYR. It's that real estate index, so it doesn't trade with that same kind of violence that the NASDAQ does or anything, but it's worth a shot. It stayed comfortably above the PSAR all day. So this is one that I'll be looking at tomorrow for an additional follow-through. but I was happy to cash 4.5 and be done with it. All right, next one up is this is Intel. So we had, again, Friday's close. Here's your gap up. There's your OR3. Second bar breaks through to the upside, so we're long. This is the size of the standard risk. When the combination of the gap and the OR3 is greater than the standard risk, you know that it's in play. This thing rolls over at 2R. So there's 1 unit of risk. There's 1R. There's 2R. This thing goes screaming up, and then it rolls over. Just take that for 2R. And then this is a re-entry after that little R10 wiggle. I treat that as a COTA 2. So we're going to be long from there. Same idea. Standard PSAR exit for 1R. This is a double top and then a collapsing dragon. Couldn't make a new high. Here was your R10 wiggle, or your R10 low. This is really a collapsing dragon. If it gets through the VWAP, I really expect this thing to fail and to come back to here. So I want to get in as early as I can. Basically a fractional win. There was not the panic sell-off that I was kind of hoping for. So that makes it easy for me to stop and reverse into an SSC. Standard risk. It gives me a fraction. So there's no follow through on either side. I'm willing to take the short again, now on the collapsing dragon for an R. I stop and reverse with the SSC just because. Scratch. Fractional win, 1.5. So it was just the grind today. Today there were no big runaway moves if you discount these first couple 2Rs. But that grinding in Intel comes in at 5R net. And this one is Mexico. So here's an here's a gap up and then an OR3. So here's the close. Here's the gap up. Here's the OR3. And it doesn't break out until about 15 or 20 minutes in. There's your risk box, standard long. Immediate 1R loss. It reverses. I just re-enter at the same price on the PSAR flip. That gives me 2R, then a standard re-entry for 1R. And I think that was it for the day. So that gives us yeah, so this one was -1. This was +2. This was +1. So +2 for the day. And no reason to chase because of kind of just grinding. All right, so those were the sniper trades of the day on 3 minutes. A demonstration of some different techniques with a variety of trades that were moving in both directions. All right, let's get the traders in here. Here's an options play for my brother. Let's see where we're at. So this is an option in material.
That was that Mattel trade.
Yep.
Remember the one that
Yep.
really, sorry, I'm at work, so I can't really talk long, but
I got it. I got it. So let's take a look at the longer term time horizon on this one. Look at the 3 day. Um,
it went from 3 day to 9 day.
yeah. Yeah. So the 9 day rolled over. This is like a tactical pause, but there's a strong upward bias in this thing, which it's in the middle of a doji. So that's a critical state ready to go. And then the PSAR's giving you the directional bias. And the RL10 is still north of the dragon. So we have a long side bias on that one. You look at the 3 day, and we're still, uh, it was just back to the middle. So this is the 30 SMA right here. So that's the middle of the river. And this thing, you can see the long side bias, and this is the little pause that refreshes. So now what he's got on the 3 day and the 9 day is a compound critical state ready to go. And when he
Yeah. So my options,
this was the exit
yes.
of starting from back in July, and that signal got him in to benefit from that upward bias that we saw in the 3 day and the 9 day, and then today was enough of a sell-off for him to take the positive gain of 14%
Yep.
gain on the contract,
Yep.
on 10 contracts, I should say. So the peak in the RL10 is sort of the first indicator that it's almost done. And this one is on the, is that the 9 day? Yeah,
Yes, sir. And then when it crosses that
the
3,
RL10. Yep, that's your
yep.
signal to exit.
Yeah. Yeah.
And he crushes a 14% gain on 10 contracts. Okay, the other traders. Let's see here. All right, here's red. The short gets paid a micro. There's the, we should be on that SSC right there. He does get what should be the second position and a good exit. This one no, I guess he gets short. Oh, he gets short here, so that should be red. No, no, I'm sorry. He's short here and then covers here. We can be re-entering here or here. He does re-enter here, but has to cut it quick. Misses this one. Here's a Z3 pinch. We could be on this one. That's so. I think you got to look at your directionality, and you're getting in line with the primary direction. But he ended up grinding away some of those early gains. Basically, a scratch day. We should be on this. That would be a reasonable second position, and then we should be cutting that in here. That's still a pretty good exit. You could stop and reverse here. That wouldn't lose money. There just was not much room other than the initial move of the day in cattle. This is Damien. Risking at 20 cents. He's long here on the PSAR flip. Exits here for his 1R. There was more available after the continuation. That's a COTA 2. That's a COTA 2. But taking the 1R is let's get paid. Nothing wrong with getting paid. Here he is. Here's a put on the S&P. Long here on the PSAR break, exiting at the first sign of weakness for 0.75. So he comes in at plus 1.75 R for the day on his options on the S&P on 1 minute charts. George, no trade on Alcoa. No, here's a 1.1 R perfectly framed and traded. So this is the start of the day. This was Friday. This is Monday. Here's the gap up and go. PSAR flip takes a reasonably wide risk, a little bit below the RL10 reversal, and then takes the dragon exit for 1.1, perfectly played. Essentially the same trade for 0.8 in IYR. Here's Lou. These are all in Campfire if you want to download those. So here's Friday's close. Here was the gap and go. It failed, so he cuts it for -1, 1.1. There's a Kata 2 emerging dragon reentry, which pays 4. There was a second position available in here. If you go to our battle drill, you get your second position here, and that 4 could have been 6, but we'll take +4, and he nets 3, 2.9. Stays out of the chop, although there were some tradable moves in Dollar General later in the day. I would rather you get very accurate on that opening piece than trying to necessarily trade it all day. This is Microsoft, and I think this was a span of control. There's a gap and go, and if that's your risk box, there may have been a 4-hour trade that way. Then on the supported fall crossing, there was probably 2R. He does get 0.3 in the chop of the day and then is able to stay out of the chop. Fractional loss here. So this is in Amazon. This is 30-minute charts. Yeah, after that nice large run up and a rollover, he takes the PSAR flip and is looking for this. That's supposed to work right away. When it doesn't, maybe as it leaves the dragon. And here's why I'm going to say that. If you were not short here and you had seen this move, you would be treating this as a Kata 2, and your entry on the Kata 2 would be when it breaks through the dragon skin here. So this is an entry where you love to be long. So if you love to be long there, don't wait to here to exit the short position, because you have lots of evidence that it's now the long side, particularly after that move. Now, it didn't follow through much further, but still, you don't mind that. Then this is a reasonable effort in the last half of the day. 50-50 coin flip if you take it. There's not that much time left in the day to do that. So I don't have any heartburn with that. So that's the trader feedback for today. Take a quick look at the trade, or the daily reports. So in the RL 150 look back, you have your 150-day high and low. So that sets up your 150-day high-low box in the purple. And our price is, in the middle of that, actually in the upper half of that frame of reference. We've had a nice little recovery. The sell-off got us right to the midpoint in the 150-day look back. And this last little recovery has moved us a third of the way back up the stack. So there's still two more of those legs ready to go before it tests the previous swing high. So we're into the tactical play. So like right now, I treat this as a critical state that, the easy money on the long side is done. We wouldn't be surprised if this failed right here because it failed here last time. But it also went up from here. So this is a compound critical state in which there's a big move in either direction available from this tight little train station, if we can call it that. So strong move in either. It's at the 10-day high. It's right in the middle of the 30-day box. And here's our 10-day and 30-day low. Here's our dragon and PSAR flip. So we have a little bit of tactical space on the downside. I'm still cautiously optimistic, but we are mindful that the downside is crucial. And if the 30-day low breaks, this is the last bit of resistance before the bottom drops out and takes it all the way back to the 150-day low. Daily charts over the last 30 days, you can see again that we're at the top of the 5-day box, at the top of the 10-day box. This is the 10-day and 30-day low. This is not resistance at all until we get up into this space. So there's really nothing holding it back in here. This is not resistance. That was a pure sell-off. So it's like it's closing the gap to get back to 445. So there could be another follow-through day tomorrow. Today it rejected Friday's sell-off with a gap up and a pretty strong finish. So I'm cautiously optimistic for tomorrow. And you can see that last week's little sell-off of the previous 4 days, day -1 to -5. Cautiously optimistic. If it breaks above the 10-day high, which it tested today, that would be an affirmative evidence. We are still in bullish, volatile. Nice little recovery day today. Volatility is slightly improving for the upside. We are in risk off, but it's no longer abnormal conditions. So we're risk off, but it's not as bad as it was when it was back down here. So the market's doing the work to be a little better than last week. I like the sight of Disney and diamonds and Brazil in the min pains. In the tactical summary, we had a couple breakouts today. Devon Energy, Travelers, Walmart. We got a few symbols still on the auto framer firing. Handful of dojis. The winners today, Pfizer, Travelers, and Verizon. So tech was not really persuasive today. It was a little bit choppy. So the main thing for today was the market did not collapse. And I take that as a bit of a positive. Pretty quiet day in the ETFs. Treasuries and oil are both on auto framers, but otherwise a pretty quiet day all around. In the auto framer, we got a half a dozen symbols that still look pretty good. I think there's an opportunity in McDonald's. I think it's turned. And I'm playing that and Coca-Cola. Yep. Just a couple squeezes. McDonald's, I like it. It's on a squeeze and 4.6 to 1. Tesla was actually relatively quiet given the rest of the peer group. Multi-NDX. Only a few collapses today. U.S. Steel. Walgreens. Treasuries getting crushed. Diamonds, energy, oil exploration, Brazil and Latin America, not bad. Real estate was not bad. That's actually a pretty good turnaround. This is a short-term turnaround after longer-term weakness. So I'm going to stay with IYR as a target. And then finally, trading value chart, relative trading value. Marijuana ETF, 9% average daily volatility and a 2.6 respectable fraud quality number. So it joins, the top 5 of marijuana, Tesla, clean energy, NVIDIA, and regional banks. All right, that's everything we got for today. We'll get this published and posted, and we'll be ready for them tomorrow. Take good care.